Hello, I'm Scott Cook, Director of Training for Behringer Harvard. This educational video is the first in a series that discusses specific topics that are important to you. We do this by bringing in the experts within their respective fields. Our first expert, Jim Fant, discusses the initial step of the portfolio building process, acquisitions.
Before we can start about targeting an asset, we first need to run a couple of filters. The first is the style of investment that's considered. There are a couple of different styles. One is a core investment strategy, one is a value add or opportunistic investment strategy. Once you've filtered that, then you consider a geographic location. We tend to focus areas where we feel like there's strong fundamentals that can support the demand drivers for the style of investing that we want to make. Then the next step we take is considering the type of asset that we want to invest in, whether it be multifamily, office, industrial. Each of these assets have particular fundamentals that we want to match well with the geographic region that we're working in. We'll find an asset. If it fits within each of these categories, then we'll target that property, and then we'll begin to leverage our relationships in the market that we're focused. We'll reach out and contact brokers or other investors or vendors that we have used in those markets to begin to source transactions and identify a property that we feel is important to invest in. Now, once a property has been identified, we conduct the first step of our analysis, and that's a desktop analysis where we take information provided to us by usually the seller, and it's going to take place through an investment banker. They provide information that is comprehensive about the property. We'll look at that information. We'll conduct our own review of that and develop a forecast or a future picture of cash flow for that property. After we've gone through an initial analysis, we'll go out and look at the property. We'll investigate the property, meet with the on-site people, go and visit competing properties in those markets to evaluate how that property competes in its setting. Once we've identified that those elements are satisfactory and we like the property and how it checks out, we'll return home and complete an investment committee memorandum and continue the process through our internal approvals.
Once an asset has been identified as a potential acquisition, the Due Diligence Department goes to work. This team is led by Jeff Carter.
Once Jim gives us the green light that we've been approved for the acquisition, we'll meet internally as a group and strategize on our approach to a given asset. We'll also reach out to the seller, introduce ourselves, initiate the coordination of the delivery of all of the due diligence documents and information we'll receive from the seller, and also schedule a site visit so we can see the asset firsthand. From there, we'll engage a variety of third-party providers and consultants who will help us work through the due diligence process. The typical inspection period is 30 days. However, we've worked on deals where we've had 15 days to work through the process, and as long as 60 days, given the complexity of a given transaction. Shortly before the end of the inspection period, we'll schedule a meeting with our fund leadership and go over our findings in detail, and at the end of that meeting, provide a recommendation whether we believe we should move forward with the acquisition. The closing process includes dealing with the seller, our legal team, the title company, our capital markets and property management teams to ensure a smooth transition of the asset into our portfolio.
The next step is funding the asset. This part is handled by our capital markets team. This group is led by Andy Bruce.
We work very closely with Jim's group in structuring a given loan for the prospective acquisition project. It's very important that we work closely together in order to help Jim's group formulate the most competitive bid in the acquisition process. Also, given the financeability of a given project is an important aspect when analyzing a potential investment. I think it's very important to have a strong relationship with lenders. I think it's important that they not only understand your business model, but know the management team very well and believe in the management team's ability to execute on that given business model in order for the company to have consistent access to capital.
Thank you for watching this video from Behringer Harvard on the acquisitions, due diligence, and capital markets processes. Additional commentary on a variety of topics is available at BehringerHarvard.com.